what's up, bulls? And then later YouTubers, we've got an alert triggered. So we've been looking at a lot of dividend stocks, Australian dividend stocks, also US stocks. But at the moment, being in Australia, we're looking at a lot of ASX Australian stocks that are proccing dividend payments and hitting alerts in buy areas or buy zones. So first thing we do is we have a look at the ASX 300 or 200 to get an idea of where the Australian stock market is. So you can get that by typing in this XJO. This will be S&P ASX 200, or you can go SPX ASX and it'll give you the choice. You can do the 100, 200, 50, 300, whatever floats your boat at the time. So if we're looking at the ASX 200 chart, you can see that it's supported by the 200 week simple moving average. What else have we got? We've got a slumpy distribution range, what looks like it. So if we look at something along these lines as well, you've got maybe a bit of a pennant here. You can draw some distance. So that is a bull pennant, but it's quite slumpy. It's quite ugly. You can sort of, so this is just to get a gauge of what the total stock market is doing, where the Australian share market is looking to go. You can see it's at the bottom of the range. So this is either obviously good time to buy some Australian shares, if you believe that it's going to go higher, or lower. So it's got about a 68% chance, or 62 to 68% chance of breaking to the upside in a bull pennant. These things, you know, obviously it's the share market and it's valued against the dollar. And what does the dollar do? It goes down. So obviously everything that's valued in it is going to go up, albeit filled with ebbs and flows. So what we can do now is we take that bias on. So stock market's not at highs, not at all-time highs. So you're not buying the top of the stock market, and it is in a risky area, but it hasn't broken down below the base. These are basic patterns, you know, basic boring ass patterns, but you're just buying a range support. So you can do range here, boom, boom, and you're buying the range support of the total stock market. So it's always just good to just see where the total stock market is at that minute before you look at anything within that trading in that market, right? So you just want to see where the company, where the country is headed. Quite neutral, to be fair, but you're looking for a value play on a dividend stock, could be nice. So the stock that we've got is IGO. It's a mining stock. IGO is a leading ASX listed exploration and mining company focused on discovering, developing and operating high quality assets focused on products critical to enabling clean energy. There's that nice word. Here is the IGO chart. So this is a daily chart. One candle equals 1 day. Got 200-day simple moving average over it. You've got the G box here. If we go like this and delete that, and we talk about range, this is my alert that was set, so that was a range low. If we go over here on trading view and we click on the G box, you can get that by icon here, the G box. It's just a really good way to sort of get a look at a range. See if you can drag this along. It might take you a couple times just to sort of work out where things are or where things aren't. But you'll be able to see like tops of ranges, areas where the ranges are, the ranges aren't, and just it spreads out so nicely. You'll get this on most assets. There's a bit of TA first, and we'll dive into the fundamentals. This is the alert that triggered. So move this alert out of the way. See how there's the center of the range mid. You can bring it up like this. Maybe I will bring that back. You got range highs where that peaked, range lows. It was a previous resistance, bang, 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 broke up, retested support, used it as support again. And then you can just see just by dragging it out how perfectly respected all these lines are, right? Like comes up, hits it, breaks up, support, hits it, support, support, support. You know, you ignore the wicks, yeah, that's price action. So price action is obviously going to be crazy, always is crazy, but just these areas, resistance. So now the alert was to come into the bottom area of the range, you know, potentially make, if you zoomed out, a weekly higher low. A weekly higher low is there. So low, obviously, so it's looking to make, you know, parallel. So a lot of people get scared in moments like this because price is down, but it's making a higher low potentially on like a larger scale chart. Yeah, head and shoulders pattern, you can read this anyway. I could show me any chart, I'll make an argument for either. But if you zoom out a bit, what's this thing done for a long time, for basically since, when do we go, you know, when do we go? This thing goes sideways, then it goes up, then it goes sideways, then it goes up. So it's gone sideways right now. It could be potentially buying a low, and it's quite a long range. It's quite a high range as well, price range. You click at the lows, 50 something, 60% to the top, previous top where it's been. We'll see if there's any divergence on here. I doubt it. Boom. Boom. Doesn't really have any divergences there at all. It's sort of flat, pretty flat. Like you can draw a line, see a horizontal ray here. We're looking for higher low, and then a lower low that is hidden bullish divergence. So that suggests trend continuation, but you can see that the low is equal to that low. These lows are equal. That's higher there, but equal there. It's called exaggerated bullish divergence because I'm exaggerating the case. That's the name. I didn't name it. You've also got momentum swing to the lows coming in the weekly. So if the price was to continue, you're grabbing at a discounted area, no doubt. I mean, you're not one of these people, are you? You're not buying it up here. You're not buying it in any of these areas. You're being one of these people probably if it continues up. So now that you know the technical analysis behind it, probabilities are skewed to the upside, in my opinion. Or you could cut it. You could cut it below here. Just cut it wrong. You're wrong. There, below there, breaks down below the parallel, breaks down below the range low, comes back, maybe retests like that, does the exact opposite of this. Boom, 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 boom. And then you're out of the trade. You cop the loss, cop a small loss. Might lose 10%, whatever. But it is what it is. You could save yourself a disaster, or you could be up for 60% plus a dividend. Now we'll get into that. Click over to Simply Wall Street. You go IGO Limited, and we'll go through the product or the company's fundamental analysis. So how did I initially find this? The alert was set. I found it by looking for companies that paid over a 5% dividend. And you can look here, discover. Discover here. My saved screeners. So I wanted insider trading plus over a 5% dividend. So I wanted insider buying ratio plus a over 5% dividend. I want to see who is buying these companies. Insiders, what insiders? We'll get to that in a second. So we'll cruise down, we can see their little snowflake. Dividend's nice. Price history, we just looked at the chart. Yep, just looked at the chart. Look into this, we'll cruise down. You can see that the P ratio is 15. It's not ideal. Ideal is obviously under 10. Price times by earnings ratio. We'll cruise through nice and slow. You can pause at any time. You can get a bit of a price to earnings ratio versus the competitors. So lower the better. Lower the better. But obviously these things have had massive earnings growth as well. So they're booming. So you want to find the nice ratio, price to earnings. So low price, high earnings. Fair value 15, current 15, current price, fair value. So what is the fair price of IGO when looking at future cash flows? Future cash flows. We estimate use a discounted cash flow model, undervalued by 34.9%. Now, a lot of the time, actually, yes, you see a lot of overvalued ones as well, but you know, there's a lot that are undervalued in this metric. Key information. We're looking for free cash flow, massive, equal to earnings and revenue, very high free cash flow. Moving down, we have pause any of this stuff, key information, EPS. These are all the stats depending on how you wanted to go into it, and it's all right. You don't have to pay for the Simply Wall Street. We got you. Free cash flow is massively scooting up on this one. So cash from operating expenses. So they're getting massive amounts of free cash flying into the business. Like free cash flow, look it up. A very important metric. One of the most important metrics, free cash flow. So what do you do with free cash flow? Yeah, like cash flow is king. Cash flow is king. Free cash flow went from 269 million last year, June 2022, in a year, 5x basically, 1 billion. Massive free cash flow, but earnings is down. So pro with the con. Earnings trend grown significantly, 52% over the past 5 years. Cruise down for financial health. Cash, large amount of cash. Equity, large amount of equity. Liabilities, assets, long-term, short-term. Debt to equity ratio, debt's quite low, equity's quite high. In comparison, you can see the little square of debt right there. You can pause it. Cruise back down. Dividend. Now here is an important one, payout ratio. So they've only missed a year at the start, potentially, or whenever they missed it. The payout ratio is 80%, so they've missed something. But the recent dividend was 7.9%. The previous ones before that, 1%, 2%, 2.9%. So absolutely shithouse. And then all of a sudden, it's ramped up to a massive one. So a bet on this is not only bet on buying it at range lows, but also that they're not just offloading a massive dividend one-off payment. It's the start of potentially larger dividends moving forward. Quite attractive, quite attractive. Moving down to earnings payout. So paid 80% of a dividend, kept 20%. That's pretty good. It's fair, you know, it's fair. They pay out most of the shareholders, and then they reinvest reinvest in the business 20%. So cash payout, paid as dividend. Management, Matt Dusky getting 2.1 mil a year. Wow, that must suck, huh? And he's just looking to get paid more and more, so he's happy. Leadership team, we don't care about them too much, but what we do care about is the ownership and insider trading. So when we look at insider trading, you can see that there is a massive amount of shares sold and bought, and recently 422 million shares sold, 474 million shares bought, and then in the last 0 to 3 months, and then 3 to 6 months is more sold. But if we look down, down here, we can see that T-Row are the ones that have been offloading heavily. T-Row sold a lot at the top, which was good for them, 16 bucks. But what else we got is Fidelity. So that Fidelity, they sold $389 million worth and then bought 719. So Fidelity are in heavily, along with the good old Wall Street friends, State Street. Look at State Street. State Street fucking love this company. Look, they offload a little bit, load up some more, load up some more, offload a little bit, load up heaps more, offload a little bit, load up, offload a tiny bit, offload nothing, offload, well, that's Fidelity. Fidelity offloaded, like we just talked about, half and then more. So Fidelity and State Street, if you know, you know, rulers of the world along with BlackRock. And we can see down here in the top shareholders, behind Yandell, you've got 8% BlackRock, 8% Fidelity, 5% BlackRock, 5% State Street, and 3.5% Vanguard. So they're the four big ones. They're the four winners. They're the ones that rule and win the world. There's more institutions owning this company than the general public. So that is what we like to see, because as we know, general public are typically the ones that lose their money. Number of employees, they do not have the data after 2019, so we can't really see that. It sort of started lulling and then rising. It went to 244 to 288, so it did increase in that year. And the implied market cap, 8.62 billion. Grab this here, if you can see. Mid cap. This is a mid cap stock. A mid cap stock. Yeah, so for me, this is a small buy. This is a small buy, assuming that the market holds. So small buy, assuming the market holds, looking for the next dividend payment. So just keep in mind, they had a dividend expected payment on October 20, and then they had the bonus one that was September 13, the extra bonus payment. And then we had the dividend that is yet to be read out, that was meant to be paid today, October the 20th, which is today. So you'd be waiting another, 7, 8, 9 months till the next dividend. So this is a long-term hold potential, but it's one of those ones where, one, they just paid a nice bonus dividend. You might lose it here if you're waiting a long time for a dividend, but at the same time, if this is a long-term investment, years, could potentially be buying it at an absolute key value area right here, and just get ready for the long-term soak. Because when something is going to pay dividends, good dividends soon, a lot of time it gets bought up. You don't get these opportunities. So you swap what you're trading is, you're trading a good entry point for a patience to get the dividends in the future, if you know what I mean. A good entry point. So you're eating it when nobody wants to eat it, and then you're shitting it out when everybody else wants to eat it. Yeah, so there we go. It's definitely one to keep an eye on, at least anyway. potentially set some alerts. If you want to look for something a bit cheaper or something, you could potentially look for when the momentum swings. So see how low this goes. You can grab a horizontal. You could bring it down maybe on the daily chart or the weekly. Probably on the weekly, you could look for a momentum swing to the upside, something like this. So you click on the stochastic momentum indicator, you go add alert on the stochastic, crossing up, and then you got to go and like this. You got to click this one, stochastic there, and it's got to be K over D. K is the blue, D is the orange. So the K crosses over D, create. And when the blue crosses back over the orange like this, give me a momentum play. See right here, bang, vertical line. See how it crosses over? Boom, green candle. You're buying the start of an uptrend. Boom, crosses over, green candle, buying the start of an uptrend. You would have got a fake out alert there, but that wasn't even a fake out. That was perfect timing. So boom, and now we might get the start of another uptrend as well. So it doesn't happen regularly. It's only happened 3 times in the last year and a bit. So if you want to wait for a good time, potentially an uptrend, that's a good way to set an alert and then nail a potential start of an uptrend on something that looks like it's in good value and also getting into a potentially high dividend paying rhythm. Take it easy, peace and love. I'll talk to you in the next one.